Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, so let's do me a favor, if you could please. Let me open up the Q&A window. My name is Steve Vetterl. I am the firm's CMA, here to cast all risk, hopefully, off of the mountaintop so that we're all better prepared. So let's do a chat room, if you could please, that you can hear me okay, see my screen. Should be seeing the Forex Factory calendar. Again, welcome for those just joining us. I know we have a lot of new subscribers. I try to do these calls at 10 a.m. on Saturday and Tuesday, and that's 10 a.m. Pacific time. They are recorded and put up into the back office, and hopefully everybody gets a chance to look at them. So put all questions, if you could please, into the Q&A window. That way I can get rid of each one as the questions come in. Anything you want the general group to see, feel free to put into the chat window. One thing I am going to do, since I do forget, is put in a link to, where is it? Social media channels. So hopefully our list will be expanding here. We've got a lot of channels to subscribe to. And at the very least, which I'm going to put in the chat room right now, I would make sure that you're subscribed to the Telegram channels and or YouTube channels for corporate and your software developer or developers. Okay, so Arrow, Variable, and Gearbox have chat rooms now. Obviously Arrow is the one that has the most interactivity in there, but the good thing about Variable is that Dasan does peel through that channel, I think once a week, to answer questions that come up. So make sure that if you have any questions, you get signed up and go into that channel and take it from there. Let's see what we got here. So I talked a little bit about this on Saturday. We have a week fraught with risk. I personally didn't want any of my GBP based pairs trading. So if you're manually trading, that's okay. You still can have all of your pairs trading if you're doing something like an Arrow, obviously, because you're choosing the trades based upon market conditions and one of 10 plus strategies showing themselves. But in terms of anything automated, especially with the equity markets have been roaring back up globally, at least the developed markets have. And that was in stark contrast to what took place last week as far as equity, because of the fact that the 10-year treasury and other countries' bonds, had big moves down, and we've seen the absolute reverse of it this week. So let's start off with the news. As you may have seen me talk about this on Saturday. Key thing also to this is that with anything that's showing up on Forex Factory, had a lot of questions about this recently, and that I choose to use them because I've never had a problem with any of their news releases. So if you're using a different site, I haven't vetted them out. In many cases, I don't know about it because this is the same one I've used for 10 years. So this is forexfactory.com. All you have to do is go up here in the right-hand corner and remove, in my opinion, everything but the red folder events. Okay, so CPI, which is due out tomorrow, don't think that's going to cause too much craziness, but keep in mind that this particular indicator may carry more weight tomorrow because of the simple fact that inflation and the market's concerns of inflation, albeit that's been exacerbated late last week. It's the reverse story now, it seems like, right? Like the last 2 days. So maybe it'll have more impact on the market. Keep in mind that these times that you see here, let me just do a refresh, are times based on my time zone. So your time zone is going to be different. You always want to make sure that you go in and set that, or you're looking at these events for your current time zone. Okay. Not sure if I've sort of made myself clear on that. It seems like there may have been some confusion surrounding that. The other important thing is that um, with, regardless of the developer with their calls or any of the introductory videos, like, the Neo launch video was just posted the 25th of February. It's actually a really good presentation that the three gentlemen, including um, all the support team, got all that stuff up in the videos in the back office. But with Fernando, the main developer of Neo, they put out a whole intro on what's called Mode 1 and Mode 2. So for those of you that maybe had some issues with Einstein and or Alexander, depending on what it was, and a lot of the settings, and I know there's different pockets of groups around the world that have gotten so many signups that they seems like they've lost focus in terms of getting everybody directed to the right calls, and support and so forth has received some tickets from people that were trading on Einstein and Alexander that we have no idea where these settings came from. It didn't come from myself or Cameron, or even in the early days when Tyler and I put together what's called the high volatility settings for Einstein and Alexander, which still apply today, right? We have no idea where these settings came from. So do yourselves a favor, just assume that um, whoever's telling you whatever from your upline as your leader, make sure you go in and double check them in the back office. I mean, everybody should be going through the AP Academy. I guess I just find it flabbergasting when I hear some of the stuff from our corporate leaders that different groups around the world, regardless of the area, have just really directed their teams to incorrect settings. I mean, it befuddles me as to why the most important thing won't be is positioning someone like myself on Tuesdays and Saturdays to help captain the call, right? You don't have to listen to me every week, right? You could certainly listen to me driving around in a car. You can, it's not necessarily as important, but for gosh sakes, I mean, do yourselves and your teammates a favor, please, and plug into the developers' calls or get a Cliff Notes. I just find it absolute. It would be like if I went and if I was a hospital administrator and somebody came to me and said, well, yeah, I'm a new doctor, put me in the operation room, right? And then I asked them about what type of background and their education, and they were just kind of like, well, I took a one sheet before I wrote my doctoral dissertation, whatever the case may be, right? And you'd look at it as the administrator, be like, of course not. I'm never going to let you operate. But it just seems to me that if you have been given a tool to potentially have life-changing performance in your trading, to build some wealth, to build a portfolio, to build financial independence, right? It seems to be the overall goal, obviously, of some of our best performing traders around the world. Is they want to build financial independence. Why on earth would you not at least take a few hours of the initial steps to educate yourself in the AP back office, right? Seems, and maybe I just can't relate to that. And maybe that's my own fault because, I mean, hell, I've probably put close to 10,000 hours into learning how to trade. I mean, I was absolutely maniacal about it in the beginning. I would sit in the office for 16 hours a day, sometimes had a clip through the year of 2007 through about 2009. Just trying to learn everything. They didn't have a lot of automated systems back then. So for those that have the ability to hook up to, one piece of software like a Neo or have a variable or a gearbox or, essentially have access and want to do trading through Arrow, I think you guys have just an absolutely fabulous opportunity in front of you to be able to be successful, but it is going to require some time to put in, right? You don't have to put in multi-hours a week, but you want to at least get an idea of what's going on with the developers call and, obviously what's going on with the markets as a whole. Maybe there's times you shouldn't even be trading, unless you're trading, Arrow, which allows you to essentially make all those trades executions yourself. In many cases, it's along with the help of the developers. So there's different things that we've been working with the developers on, potentially an AP live TV where there's a live trading room. I can't say how that would come to fruition or if. It's an idea we're sort of kicking around. Do keep in mind this is an exceptionally expensive thing to implement, right? So just understand that you're looking at thousands and thousands of hours of coding. It's going to wind up costing this firm hundreds of grand to put together or more. So, maybe that helps a lot. Maybe that gets everybody sort of in, you have to get into the live room and or some sort of forced way within a certain parameter of you can only lead so much horses to water, right? You just can't make them drink. That maybe that will continue to really encourage going through the AP Academy and the live portions that we are broadcasting each week and asking questions, right? I always say, with my team guys, you can't ask any questions if you don't attend, right? Now you can always ask them to Dasan later in the variable room or to Tyler and Gearbox, or eventually there'll be rooms for everything, including for future pieces of software come out with. But at a bare minimum, this is, I seem like to a lot of those that are exceptionally plugged in are on my weekly calls. We have some great attendance, which is awesome. I love you guys. But I think everybody should do just a little bit more for getting the word out to your team, about what's going on. Or just, you could put a one-page sheet together for your team based upon what I say, and or, what does San say? There's not as much required with Neo in terms of the software operating on its own, but I still think it's important to plug in to see, what does Fernando have to say about the current week? What were observations on the previous week? Just a couple of nuggets, just with something as simple as Neo, which is done very well in mode 1 or a more aggressive mode 2 or a combo of the two, right? But I don't know. I think maybe it's the frustration on my part with just the lack of pushing the education point. And so my hat's off to Susan and her team, which has done an excellent job building out, which has just been an incredible and will be in a continuing incredible back office. Anyway, so that's it. I'm off my soapbox. So let's take a look at the markets. DXY. And getting some feedback, guys. Can you guys hear me okay? Somebody's giving me some feedback that they're having some issues, and I wasn't sure if it's related to myself or something showing up. Let's take a look at DXY. All right, we're looking at the dollar. I'm sorry, the daily chart for the dollar. Notice that it's poked its head up, coming up against big, this is well over into the late last summer. I drew this black line here, which, essentially the combination of our orange, black, and red is all a resistance point, essentially, but coming up against that, it's reversed, okay? So far, resistance is holding. Will it go back down inside its channel? I don't know. So I guess at some point, we have to sort of decide, we looking to maybe continue to balance, or will we go back down towards the bottom of this and break, which is arguably, by the way, and I don't know how, let's see if I can just play this out here. Straw. Drawing a trend channel. These don't have to be perfect. They just, you want to make sure you touch a couple of the bottom and tops of these. Doesn't have to be perfectly symmetrical. Let's see if it plays out. I don't even know that this is drawn this well. Let me just correct it. I have been asked in the past with TradingView.com, which is the software, there is a number of automated trend channels that will draw out. But the problem is that you wind up with a whole page like this that I can't see what's going on because there's zigs and zags and there's just charts all over the, or I should say trend lines all over the place on these charts, right? So there should have been one drawn here, right? And then it broke at this point, which didn't necessarily lead us to anything more than a little creeping higher. But these trend channels can have, they can serve a pretty serious purpose, kind of on the JPY one that's was running for a while. But essentially, we were trending down here until we broke. And usually, once the channel's broken, if one is utilizing variables as an example, then even though the channel's broken by one day, doesn't necessarily mean that the trend is broken, but at least you're on high alert for potentially changing the software to a non-trending and just a balancing based option, or turning trending off, right? So that and the red folder events, I know that Dasan has made a commitment to, in addition to answering more questions, to corporate to try and have some expand. I know he's trying to code that into the software at this point, which will keep it out of the way of red folder events, as you certainly can turn off on Einstein Alexander as well as Neo and Gearbox. So I think he's looking to sort of fall in line with the other three pieces that have that ability. Just keep that in mind. So social media, let's see, got that. Let's take a look at bonds, dollar chart first. Now this is the craziness that's played out in the 20-year treasury market here. Notice we've had some big moves down. This corresponded with a sell-off in equities. And now we're moving. S&P, for the question I just got on that right here. Make sure. Right. So DXY, let's go to US. In the comparison to some of the foreign guys, let's start off with the euro. We've broken below this. Now it's possible, although I don't really see it here, that we've had a reversal off of the longer term trend line from a moving average standpoint, but also was just a peak down in of what was a very well defined range that lasted for a good chunk of the latter part of last year. So certainly through Q4, arguably entering into this at the beginning of Q3. So you're almost looking at a 6-month pattern with about another 4-month pattern that's now being tested again. So these are pretty solid resistance and support points. And you can see how it's reacted to it, right? So the problem with right here is I can't give any real clear advice as far as the MAV versions of the software, and or for those wanting to turn off or on any trend-based option, right? Because I still don't think we're necessarily in a trend. And I guess you could argue that, well, from here to here, it's been a sharp. I don't think that's been a trend. So for now, I'll just remain as neutral on what to do with this, just looking at the charts. Euro GBP dropped back to the support that held 3 days ago. We're basically coming up to test it again. Obviously with the strength of the pound across almost every currency. And this should really not come as any big surprise to long-term listeners, because I have said we need to get all of the Brexit stuff straightened out, and then I think the British economy is going to be on considerably better footing, standing on their own 2 feet, if it is entirely possible, right? You're seeing that being priced into their currency in terms of its strength relative to other countries. I think the surprise with this was the swiftness of which this moved, right? So I always start off with DXY. look at the euro, then I want to look at its relation to GBP as sort of like the final pin action of this ring, right? And then I start with GBP USD. Okay, so looking again, DXY, right? Let's drop to daily on this. Maybe this is a continued trend. Don't think so. Opposite's the case with euro. Now let's move to GBP USD, same thing. So came up and had a really outside of the Bollinger Bands or Keltner channels, whatever analysis you wish to call it. Some call it just stretched, came right back down, essentially just went up and blew some stops, in my opinion, then completely reversed on longer term resistance that we had up at this point, looking at the weekly chart here. So the 42.20-ish area, big resistance, came right back down. But we've been more in a trend on this on the weekly. See this? So arguably you would have said, well, we broke trend because we blew above the line here. I'm not going to draw it. You guys can kind of just see how the trend lines would look. We blew above it, but it didn't necessarily negate that, because typically, especially on weekly charts, you want to see at least a candle or two print outside of the trend for it to be confirmation that it's over. All right, let's see what else. GBP CAD, still inside the range on the weekly. Let's go back to the daily. Same thing, albeit a broader range. You had a lot of it, and I'll tell you, this is another example where, for those dealing with some drawdown in GBP related pairs, just because of their exaggerated moves over the last couple of weeks, letting a multi-sequence, if you can withstand the pressure of this drawdown, but letting a multi-sequence set itself up, even though maybe arguably it shouldn't have been trading against this, should have been trading like trend like, right? But the fact you would have put on up at this level, sequence 5, 6, 7, even 8, depending on the software shorts, the accounts were really taking some heat up here, right? But those trades would have made a bunch of money. So if the account had sustained this drawdown, essentially, this is one of those times where if you can afford to, you maybe cast a wider net of equity drawdown inside the account, right? And that's adjustable depending on the software. But this would have been, because we came up, we were really stretched, and I was expecting a snapback. I've talked about that a bunch. So a lot of people say, what do I do? What do I do? I'm in a lot of drawdown. I'm like, look, I'm not telling you to step in front of the software and be smart, right? You always have the ability to turn off the real high levels, which really can put you in drawdown. But this is where martingale systems really pay. Even though you're taking the heat, right? Those big trades, they paid huge in these moves back down. Right. And even though some of the stuff that was caught on earlier, which essentially would have been here, right, in these areas, some of these trades, you were taking obviously a lot of heat on that, but these trades were smaller, and this is sort of a just a generic hypothetical. Obviously, it's going to be different in terms of how it acted inside your accounts, but this is just another example of why I am unwilling to step in front of the software and say I'm smarter. What if you just cut bait right here? Imagine how pissed off you'd be seeing that it's completely come back down within a range. Had you just had a little patience, it would have paid off, right? Not strategy necessarily applies to really MAV versus more automated versions of the software. It really is just understanding that when you get really stretched in a trade, standard deviations at this level on a daily chart, I don't have them on here, but I could tell just from history, are probably near a 3 standard deviation, maybe between a 2 and a 3, which means you're getting wicked stretched, meaning that rubber band's either going to break and it's going to completely leap higher, which I doubt, or the markets are going to come in within reason, or institutions are going to step in and defend big levels, or just come in and start piling on shorts, which is what my suspicion was at this big level. Keep in mind, this is a weekly chart on the pound, right? And same thing could be said here. I don't know that necessarily it's important as to what currency major it's compared to. As far as GBP's in the equation, we saw a lot of that take place. So you look at enough of these charts, they always seem to sort of mold together, but in the long run, you'll begin to see patterns develop that you will just see repeated over and over again. And that's typically, at least in this particular case, we got wicked stretched, multied, out in terms of the channels or whatever you want to look at, and markets, especially the majors and many other markets, especially in the developed markets out there, they have a much higher propensity to be mean reverting, meaning that once they get really, really stretched out, they want to snap back. That we saw here. Because we got a fair amount of, hey, I'm in drawdown, what do I do? And these GBP related stuff is really putting pressure on my account. I'm like, look, just have some patience. If you can afford to lose the capital, I'm not saying lose it, but it's just, sit tight, if you will, and it should come back a little bit down to earth, which it did. GBP CAD, what else do I want to say? That's pretty much it. Let's look at CAD, CHF. So if we look at the Canadian dollar versus Swiss, jump back to the daily, or let's jump to the weekly. See, this is more of an exaggerated move. But I think a lot of this had to do with just the rips the GBP took against CAD. Had almost had a completely opposite effect on its relation to the Swiss. It just moved up. But again, look, a big area of resistance right at resistance line. I think this is a 50% fib retracement of the whole previous move over the last couple of years as well. So that's a big point in terms of confluence, right? Confluence being nothing more than different types of technical analysis all lining up in the same spot or somewhere in the same area, right? We always call them zones. And this is a zone of big importance. So you would expect a reversal in addition to being really stretched out. That's more of a weekly chart, obviously. But if you look at the daily, being really stretched out and wanting to come back down to earth. So not coming up here and saying, oh, well, it's going to continue higher. I'll just close out all my trades that I'm in drawdown on. Not smart, because look, it's already pulled back. So GBP, CHF, same thing. Seems to me, the Swiss has just gotten clocked in all different areas in relation to much of the more prevalent majors. Let's go to the weekly. Arguably this could actually extend a little further higher into this area, but this 33.25-ish area is big resistance. I would think that, this is one of those things where, I'm not going to get too involved in this, but in any market, if the move up into this area is swift, like let's say it took 2 or 3 other days of candles to get up to this area, you are so super stretched in that if you have the kuyan, so to speak, or the fortitude to stick it out, this would be a great place to put on a short. We have to move up there quick, though. If we just trade it out, through many, many days and then stepped up against it, we're going to go back and test this area, right, on the weekly, because it's a big, big area that we've positioned in multi times over the last 2 years. But a quick, swift move into these areas is always one of the very few times that is playable, in my opinion, to step in front of the freight train, okay? Which is normally not something I do. Trading with the trend has a much higher win rate, regardless of what software or what time frame that you're trading on. What else? All right, so that's it. GBP, JPY, same thing, same story, different currency, but the strength. You're looking at higher time frames. You're looking at, notice how fast we lifted above all these areas. But to keep in mind, each of these candles represents 1 week. So this has been in full trend up. Any software trading this should be on trend based, because of the fact it's been full trading up for quite a while. So I guess I probably should have some trend lines drawn on this. USD JPY, Now we've had a reversal at, what was a pretty big area right in this 109.30-ish. Last bastion of on the weekly. It's 200-day. See that brown line? Big area. Should expect that its extendedness will snap back. This is US dollar Canadian. Still stuck inside the range on the daily. Too much going on. USD CHF. Did I go through that? I think I did. Yeah, so here's USD Swissy. So we have, let me just jump to the weekly. Not as much clearness here. See that? I don't really have a lot of clarity on that one. Let's try the daily. Let's see, we're up in nosebleed section. I don't really have any. It's not that clear. I mean, this area is clear, but we broke it. I can't see it's going up there that fast. That would be big. But the weakness sometimes in the Swiss in relation to other majors is sometimes just breathtaking. But, just from a strict, I guess maybe I should overlay some, I'm going to overlay some standard deviation lines or some Keltner channels. And then it really doesn't matter whether it's Bollinger Bands, Keltner channel, standard deviation, as long as it's a commonly used analysis. The only thing you want to glean from any of that is just how stretched it gets outside of that, knowing that there is a propensity to mean revert. Let's take a look at the Euro JPY again. Looks like a couple people want to coming in late. Here is the daily. Not as much clarity, obviously, right? Let's go to the weekly. I have no real clarity on this. It's all gobbledygook in here. It's nothing really that clear. Because we're all above all of the support and resistance lines, especially from a weekly perspective. Sometimes you need to drop to a monthly to get some clarity, right? Now we have clarity on the monthly because we're up against big support and resist, or big resistance on the monthly. Okay, I don't go back to monthly that much, but essentially we're there. So this should hold. Does that mean we trend right at these numbers for a while and then move higher or go back down? That's the problem with this. There's not as much technical analysis that I use in other types of markets in Forex. So I can't give as much clarity on that, right? Ideally, if this was, the E-mini, which is the S&P 500 E-mini futures contract, and we're working on the H2 contract, as you guys can see here, which is the March 2021 of the CME traded futures contract. This is my primary trading instrument in my other accounts. We can have an aggregated volume from one centralized exchange, being the CME, to analyze. It's not the case when you got 14 plus banks transacting to liquidity providers in Forex, right? So it's a little more difficult having a love, if you will, of the data that is brought in here, which the trading you guys swear by. It's coming in from multiple sources. I just don't have a lot of trust. Euro AUD monthly. There's a monthly. By the way, look at what that showed. It held to the tick of the monthly resistance point. Now, maybe this just formed after it came back down and 2 bars built it on the monthly, but we blew way by it. We closed on it. Now, much could be read because the heat was certainly taken above this, but drop back to a daily chart on this. Just reset the price scale. Not a lot to go on, right? Other than these lows. So we drop back to weekly, and we're on support right here. Also have, and where is the, here it is, lost in the mix. So we had a cross here. See how the green crossed the brown? So we had a cross at this extreme point. So this would have been a shortable event, in my opinion, on the monthly. But essentially we're at support right here. This 5410-ish, 5400 period area. And we're there. Should hold on the monthly. Not as much clarity here on the weekly, right? Daily. No clarity. Other than the fact we're in a trend down. See that? Draw all these lines, trend down. You probably want to draw the trend lines, match them up to a couple of these top wicks of these candles. Use it as a point for breaking one way or the other on the daily. Draw these trend lines, they'll carry over as long as you just click save here. It'll automatically save everything you draw in here. So let's go on trend line. I usually start with the top. Top trend. Sometimes they are sloppy. There we go. A little better. We'll save it. So keep an eye on this and watch for this potentially to break. Take this a little bit. All right, cool. All right, so I got that. What other questions we have? We got that. I got answered that. We answered this. Yeah, no, thank you. Appreciate that. I'm here every Tuesday and Saturday, 10 a.m. Yes, you are. That is correct. I do sound like a soapbox. It's because I continue to get messages from Josh and all the big executives and some of the leaders that, hey, there's a group that's gone awry in this part of the world, and we need to bring them back down to earth and get them on the calls. And there's only so much you could do, right? We can lead them to water. We can entice them with gifts and raffles and all kinds of fun stuff. But at the end of the day, it really is up to the individual leaders globally. For you guys, as I look into the camera, you guys to lead your team to these calls. So, but I will wish everybody a hell of a trading week. Let's take a quick look at the coiner for all you lovers of the coiner. Tell you for what it's worth, both Jeremy Grantham and a couple other big, exceptionally well-respected Malden have really come out against this coin, along with a bunch of big hedge fund guys. So not necessarily neither here nor there. I carry no opinion one way or the other, but they think this is going to be worthless at some point down the road. I don't hold an opinion one way or the other because I don't know. Here's gold. Look at that big reversal, by the way. Notice we were dropping down into gold, and then we actually, let me look at the 4 hour. Yeah, it's a pretty good gap up. Gonna blast some shorts here on gold. May see a nice lift into some of these areas on the daily. If my clients weren't already way too heavy down here with the ads that we've put into some of their lighter positions in gold, we're now a little heavier with this pullback. So let's hope this sustains growth. Because typical first down financial client it's got about 9% in gold. All right, everybody have a great week. wish you all safety. Get the vaccine if you so choose. If not, wait for others to get the vaccine. Let them be the guinea pig, and be safe.